going to give you soup to nuts, everything you need to know to get the most money at the best terms. We're going to talk about business credit. We're going to talk about the 3 C's, how to easily know exactly the type of financing to get. We're going to talk about the industry secrets to dive in and be able to get the most money at the best terms. We're going to talk about what lenders are really looking at and unfold or pull back the curtain to show you the entire formula of exactly how to set yourself up for success. And then I'm going to give you the shortcut. Like in the end, I'm going to give you like a shortcut to be able to get the most money at the best terms, build your business credit, improve your fundability, get financing, and do this way better and way faster than what most people are out there doing in the space right now. So what are we going to cover today? Well, how to increase the chances of getting loans approved, right? I'll give you an example. Just now, as I sit here right now, I just got a $300,000 loan approved, not SBA, with my bank. Okay, so I know a little bit about this, and I'm going to teach you today exactly how to get that done. As a matter of fact, that's just the loan. We've got another $300,000 credit line coming right behind that. So how do you get these massive loans, these big approvals? I'm going to show you today exactly how to do it. You understand what lenders are looking for. It's easily to meet their criteria, surpass their criteria, show them what they want to see, and be able to get the approvals that you want to see. And by the way, why am I doing that? Same reason you should be, right? Okay. All indicators show a recession on the horizon in 2022, 2023. We should be stocking up on money right now. Loans, credit lines, that's exactly what we're doing. And that's exactly what I'm going to show you how to do today. So we're prepared for the impending recession, the change in the economy, the increasing inflation, everything that we're seeing here today. What fundability is, this is the lender secret formula. We're going to decode that today. I'm going to show you exactly what it is that lenders are looking for. Okay, we're also going to talk about how to get more money and get it at the best terms. We're going to talk about how and why paying attention to the small details make a big difference. And I'm going to give you a little insight here. It's not the big stuff that's getting you denied. It's not your credit. It's not your revenue. It's this little stuff that lenders are looking for that you don't have that'll get you denied. We're going to talk about business credit. We're talking about an overview of building business credit, benefits, what it can do to help you as well. For those that don't know me, my name is Ty Crandall, 20 years plus of experience in the financial sector, built, sold consumer credit company, probably one of the only people you'll hear from in the space that's done that. 2 of the best-selling books on consumer commercial credit. I also oversee the largest partner division of loan brokers and people that offer business credit financing in the country. So not only do I know this because we've helped 50,000 people through this process, but I know a lot about this because I literally oversee thousands and thousands of loan brokers or partners that are out in this country offering business credit financing. And collectively, what you're going to see today is it's accumulation of all this knowledge, all these people we've helped. What's the secret code, the straight formula to get approved? Speaking of Credit Suite, now nearly 50,000 people we've helped. Best one entrepreneur or most entrepreneurial company in 2018, Entrepreneur Magazine, 2019, 20, and I don't know if they haven't released the results yet for 2021, being one of the fastest growing companies in the country per Inc., A+ rated with a BBB, hundreds of online reviews, including video testimonials as well. And we've been featured on everywhere. I mean, we were just on 4 or 5 news stations last month. So CBS, ABC, NBC, as well as Entrepreneur Inc., Forbes, all these type of places is probably where you've seen us, where you've seen me. Only tell you all this stuff, just so you know, I'm not some dude that's just done this for myself and I'm teaching you how I did it. Like what I'm doing today literally is showing you exactly how we've helped 50,000 plus people do this. Then we accumulate we basically gather all the knowledge from all that we've learned. And now here you're going to learn the shortcut path today that we're going to go over. Now, if you are sticking around to the end, I'm going to make sure it's worth your while. Not only are you going to get a ton of valuable information, but we're also going to be able to come in and get through 30 days of business credit monitoring with Dun & Bradstreet, with Experian, and with Equifax as well. We're also going to talk about getting you a no-cost business credit consultation. So if you want to learn more about building your business credit, we call this a finance assessment, then what we'll do is we will make sure that you can talk today about what financing you can get, fundability, building business credit. All of that, if you just stick around at the end, I'm going to get you access to that at no cost. So are you in the right place? Well, if you've been turned down, you want to know why? Well, that's what we're going to talk about today. If you were approved but didn't get as much money as you wanted to get, well, we're going to talk about that today and how to fix it. If your business is getting to a point where you need more financing to get to the next level, or if you're getting financing, but you don't actually get the terms that you want, then we're going to talk about that today as well. If you've exhausted all other sources of financing, you don't even know where to go to get money. You're starting a business, your credit's bad, you have no collateral, you don't even know if you can get money. We're going to decode all that today. If you've got an intriguing offer opportunity to help and improve your business, but you don't have the money. Okay, so that is another possibility as well. And again, we're going to be talking about how you can get the money you need to navigate what's ahead. Inflation, right? Recession, all the perfect formula. And that's where I think people get distracted. They look at COVID and they say, man, that wasn't bad. Economy shifted. Yeah, but all the government poured all this money in. And now with this record high inflation, with gas prices going up, with this perfect storm of events that's taking place, most economists are predicting that this year, next year, we'll see a real recession. And if that comes, are you prepared financially for your existing business or to grow a new business in that? Well, that's what we're going to do today. We're going to arm you with the money you need to do so. So let's talk about business loans in your business. Every business needs money. I don't care who you are. If you look at Apple, Apple has over $100 billion in debt, $100 billion, and they sit on $130 billion in cash. So why is that? Why would a company as big as Apple have way more money and billions of dollars cash in hand, but yet they're still borrowing? They still have $100 billion in debt. Well, that's because the biggest companies have got where they are because they understand how to use OPM, other people's money. It's as simple as that. Okay. The reason Walmart is because 80% of what goes on their shelves, they use business credit to buy. They go pay bounty for paper towels using business credit. Then they sell the paper towels to you and you give Walmart money and they take your money and they pay off the credit they use to buy it. It's why they're the number one retailer in the world. I can go on and on beyond Apple and Walmart, but they're all the same way. If I sit here and pull a business credit report for Dell or for Apple or for you name a privately or publicly owned company, Publix, any of them, you're going to see they have hundreds of trade lines. They're borrowing money from lending institutions, credit issuers. It's how they got as big as they are. You're going to need to too. As your business grows, you got to have money, but approvals aren't guaranteed. As a matter of fact, a lot of people don't even understand the formula behind getting approved. And by the way, if you're just coming in, give me a shout out. Let me know where you're coming in from. And also, I'm not ignoring you. Usually I give everybody a shout out, say hi, answer your questions. I'm going to do that at the end. But we have so much to go through today. And I've got a webinar going at the exact same time I got a live stream. We're streaming in all these groups, on all these pages, and all these different places. And at the same time, we've got a webinar going as well. So I've got so many questions and comments. I'm going to get to them all, but I'm going to wait to the end today to make sure I can get all the content to you, all the training, and then anybody that wants to stick around, hear other people's questions or have yours answered, we will. So let's talk about how to get money. It's pretty simple. I broke this down into the 3 C's cash acquisition formula, and we created this decade plus ago because we just wanted to simplify to business owners what you can get. A lot of people don't know what kind of money they can get. And so this formula is really simple, and here's how it works. There's one of 3 things lenders want to see: credit, cash flow, or collateral. If you have one, you don't need the others. If you have none, then we'll talk about solutions that will still work for you today. So a simple example here is if your business has consistent cash flow for 6 months, you can get money. You can get loans. Okay, even if your credit's bad, even if your collateral is bad. So you see how that works. If I have this one strength here of cash flow, I don't need the good credit. I don't need collateral. Or if my strength is good credit, somebody else, guarantor me, then I don't need cash flow. I don't need collateral. So I just need one of the C's. And in order to get, SBA loans, for example, you need all of the 3 C's. So we're going to break down each one of these today. And I'm going to give you the columns or the categories of these and all the funding, or a lot of the funding that falls within these. So you'll know what kind of money in each category we can get. We're going to talk a little bit about fundability today too. Look, fundability is where it all happens. This is where we really started to dive in and figure out what credit bureaus do lenders look at? Why do lenders make the decisions they make? Why do instantaneous approvals or denials for credit cards happen so quick? What is it these computers are actually looking for? What is it their algorithms look for? And how do you give the algorithm what it wants to see to actually come in and issue an approval? Okay, and this is the kind of tech behind Credit Suite. We've spent literally millions of dollars building our business finance suite with data teams, with full development teams, with analytics teams, all within the company. And what we do is we go to work with all these lenders and credit issuers to say, what are they really looking for approvals? And then we create scoring models, and we have a step-by-step software and arm our advisors to help clients understand this is exactly what they're looking for. And it's as simple as this. Like, if you get what they want to see, and then you set up your business the right way with where it's fundable, then you're going to get approvals. But if you miss these steps, this is where you get denied. So we're going to decode a little bit about fundability today as well. So, okay, you've got 3 missions when it comes to getting money: getting approved, getting as much as you can, and then, of course, you want to get the best terms. And this is what I say all the time, because first of all, it doesn't help you if you need money to get denied, right? That's only going to hurt you. So you've got to get approved, not denied. It limits frustration, and it limits you being able to get the money that you need if you do get denied. So we've got to get you approved. But getting you approved really isn't good enough. We've got to get you as much money as you can. And a lot of business owners may get approved for a credit card or get approved for a loan, but they leave a lot of money on the table. They go out and get a $50,000 or a $75,000 loan, whereas we come in and get them a $300,000 loan. They come in and get a credit card with a $10,000 limit that reports to the consumer credit reporting agencies. We get them a $30,000 limit credit card that reports to the business credit reporting agencies. If you get higher approvals, you need less funding sources to do what you need to do. So we got to get you approved, but for the most money. And we got to get you approved for the best terms, because a long term of a 30-year loan makes a $300,000 loan really practical to get. But if you have a 3-year term, which a lot of business owners get, well, then you can't borrow $300,000. Like, your payments on that would be outrageous. Like, they're $30,000 a month if you do something like that potentially. So we've got to be able to come in and get a longer term, because that's going to give you cheaper payments and lower interest. So this is the combination. This is what I'm going to decode for you today, the formula to do these 3 things. How do we get approved for the most money at the best terms? That's it. This is the nuts and bolts of exactly how to accomplish that. Okay, so therefore, there are a few concepts to keep in mind as you apply for business loan. We got to keep in mind with these goals. And by the way, if you're coming in, tell me where you're from. In the webinar, in the actual live stream, just give me a shout out. Say, hey, Ty, I'm coming in from Nashville, Tennessee, or wherever it may be. I always like to do that, and I'll see them come through my feed here, maybe even be able to give you some of you shout outs as we go here. Okay, so you got to check requirements carefully. You don't want to apply unless you know you're going to be approved. Okay, this is exactly how we do this for our clients. And so you can see that this isn't theory. Okay, if I go to build my business credit, keep in mind that this is exactly why our clients build business credit in 6 months when others almost always take 3 years to do the same thing. Because every source that we have in our finance suite, we have the actual underwriting requirements. It's just, this is the secret to success. If you understand exactly what lenders and credit issuers are looking for, then you either meet the criteria or you don't. And if you don't, then you don't apply. And if you do, then you do apply. And this, therefore, you're only applying for financing you know you can get, credit you know you can get, okay? You got to look at the terms closely to make sure that, like, you know, there's nothing in there that's going to be a surprise or that's going to be something you don't want. So let me give you a simple example. There's financing we'll talk about today that's based on your cash flow that you can get with a personal guarantee or without a personal guarantee. The only difference is which lender you choose, okay? The other thing that you've got to make sure of is if there's not hidden fees, if there's not interest rates you don't know. This is why an APR, an annual percentage rate, exists. Because an APR exists because we have fees from lenders, underwriting fees, closing fees, application fees, blah, 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 fee. Banks love their fees, right? And then we've got interest. Well, how much are we really paying? Some have very little fees and high interest. Some have very little interest and high fees and hidden fees. APR just tells us really what we're overall paying on the money we're borrowing. So we've got to come in. We got to know how to look at these terms they're giving us to make sure that we're getting the best deal. Excuse my language. We're not getting like screwed over. We've got to know that. So especially if we don't have a lot of time in the business or if we're other higher risk factors. So we got to consider how much money we need. We got to be realistic about it. Even if we can get more money than we need, well, we don't want to probably do that with loans. We want to get what we're actually going to use. So if I get a loan for $300,000, I got to have a plan for deploying that money because I'm making payments on it. And usually you don't want to get a loan and just having it sitting around not working for you, but you do want to do credit lines. Okay. Or if you know something's coming up, you want to kind of get stocked up on money. From being the money guy, right? 2 decades in this space, 50,000 people help with business credit financing. I'm right now stocking up. I am banking cash right now, preparing for what I think is going to happen. So that's a pretty good sign that, hey, maybe you should consider doing the same thing. If the guy that looks at all this and manages this and actually is in charge of helping a lot of people get money is getting loans just to have, because I think the inevitable is going to happen in the next 18 months, is something you want to consider too, to make sure you have access to the capital you need before you need it. You got to have a plan. You don't want to just search for loans one under duress. And this is what I'm saying. Okay, there's a reason that there is no recession currently, but that Credit Suite, we're stocking up on loans and credit lines. There's a reason for that. Because I've been in this space long enough to know you don't want to be under duress. You don't want to have your business under fire because of an economic shift. All these things that can happen, then go looking for money. One of the very first things lenders look at is show me your recent bank statements. When they see declines in revenue, wow, it's a massive red flag. I mean, right away, 70, 80% of lenders are going to pull back. So you got to make sure that you're looking, have a plan, see what's coming up, and get money before you need it. And this is a common myth in lending, right? That you actually come in and you usually only people won't give you money when you need it most. Yeah, you're right. Because lenders don't want to give people the money that's not going to get paid back. Let me ask you a question. I've been here before. I don't know if you have. Have you ever lent money for a friend that's under duress? And has that money ever been paid back? I've lent a lot of money to friends in duress, and I can tell you that very few of them ever paid me back, because when their back's against the wall that much, when they're hitting up their friends, they got way bigger problems they typically don't ever recover from. Banks aren't stupid. They know the same thing. You don't want to get money under duress. So you got to prepare for an impending change in the economy, recession, these type of things. Emergencies are going to happen. So line up your ducks, have access to revolving credit before you actually need it. It's going to help you actually succeed. So let's talk about these 3 C's. I broke them down for you. There's 3 ways to get money for your business: cash flow, credit, or collateral. So let's dive into the first one, which is collateral. So collateral basically gives the lender recourse. They can take something back if you default. It's why it's one of the easiest kinds of financing to get. Okay, by having collateral, if you have some kind of asset that can be pledged as collateral, makes it easier to get SBA loans and big high value bank loans and get the lowest interest rates, even if you have credit issues here. Okay, so for example, a lot of people sit on retirement funds, or you might be sitting on old equipment, or you might be sitting on account receivables where your customers pay you on terms. So let's talk about some of this, like stocks and bond financing. We call this securities-based financing. So this is where you just use the stocks and bonds of you or somebody else. And by the way, you're just coming in. Tell me where you're coming in from. I like to give people a shout out, say hello. Corey's coming in. What's up, Corey? And Teresita Jones, thanks for coming in and sharing people as well. So tell me where you're coming from. I always like saying Nashville, Tennessee, or Dallas, Texas, or Seattle, Washington. So I always like saying hi to you. So stocks, bonds. What's nice about this, I love 2 things, and I'll love 3 things, and I'll tell you what I like the most. First of all, this is just cheating. It's just cheating. I don't even understand how it's possible. And what I mean by that is that if I have money in the stock market, it's earning me a return, right? With securities-based financing, very few people know about this. What I'm able to do is my stocks still stay in the market. They still earn me a return, but then I can borrow and get a credit line against them and then deploy it till I have my business. So now I have the same money working 2 different places. It's working in the stock market, I get a credit line, and it's working to grow my business. What else I like about this is that you don't have to have the stocks and bonds. It could be a family member or friend. So 75% of business owners get money from family and friends. Well, if I go to my dad to get money, my dad's got to liquidate his stocks, pay penalties, and then he gives me the cash. But I can go to my dad and say, you don't need to do any of that, Dad. I want to leverage your stocks, get a credit line. The only way you lose is if I default on it and don't pay it, then they take the stocks. But as long as I'm paying on it, like, you don't lose, you still earn the interest in the stock market. I actually get a launch of business. I can even, Dad, give you a rate of return of 8%, et cetera, et cetera, et cetera. So this was a topic the other day when I was around a bunch of people in the real estate investment space. And what the topic is that there's a lot of people that want to get into real estate investing but don't want to do the physical work. And they're willing to have you do the work and give you the funds you need to do it by using something like this as leverage. And then they just get a 6, 7, 8% return on their money. That's what they want. They want a rate of return. If you're willing to do the work, they're willing to front the money through programs like this. And having access to programs like this makes it easier for you to do. Gene, what's up from Albany, New York, and Forty, Texas? Veronica is in the house. So thanks for coming in, everybody. I will answer all questions at the end. But again, thousands of people will literally have, between the webinar and live stream today, too many to answer and still make it through the training. So stocks, bonds, same thing. You can get up to 90% financing against stocks and bonds. Most stocks and bonds are going to work. Interest rates as low as 1.6%, almost always less than 5%. All you have to do is have more than 25 grand worth of value of your stocks, bonds, somebody else's, and you could typically get approved. Okay, now 401ks also work. 401ks and IRAs, you can borrow as much as 100% of the value of 401ks, IRAs. You get into this with no tax penalties. It's a IRS proven strategy called rollover for business startup or ROBS. And with this program, you pay no tax penalties, but can liquidate a 401k or take part of a 401k and use it to start a business. The number one kind of funding that partners use to start businesses is right here. Same thing. Doesn't have to be your 401k. It can be somebody else's 401k that just wants to pledge that to you and you get a rate of return. So I like these kind of financing because interest rates are low. Personal credit doesn't matter. You can get it as a startup. You don't have to have cash flow to get approved. All you need is $35,000 in 401k or IRA, and you're able to get approved. And again, the interest rates are typically less than 75%. Let me turn my AC down just a little bit here as well. Or interest rates are less than 5%. Personal credit doesn't matter. That's pretty cool, right? So stocks, bonds, 401ks, IRAs. Here's one of our clients, Herman, that was tapped into this kind of financing as well. And you can see from him, hey, with Credit Suite, your one-on-one consultant calls you within 24 hours of signing up. They call at least 5 times a week in the first 2 weeks. And after that, even though it's been several years, I've been working with them. My one-on-one consultant still calls me every Wednesday without fail. Absolutely incredible. My favorite line of credit I got using Credit Suite's a $10,000 Amazon card used to purchase things low, sell high on marketplaces. Also a $40,000 Amex. None of my accounts show up in my personal credit report. So if I max them out, doesn't hurt me personally. So I was able to purchase 2 properties in Cleveland, Ohio. It's been a blessing. So this is the reason I want to show you this is a very typical case study with Credit Suite where we see entrepreneurs that are running multiple different businesses. And by coming in and getting these things in line, like I talk about, understanding the 3 C's, building the fundability, doing some of the principles we talked about initially, they're able to come in and get no limit cards, $40,000 limit single cards, able to get retail credit as well as all this kind of financing includes stocks, bonds, 401ks, and IRAs to do some pretty incredible things. So besides cash flow or besides IRAs, let's talk about other kind of money that could work or collateral that could work here. The most common type of collateral is called AR, account receivables. And this is where we let our customers pay us on terms, but we leverage that asset, the account receivables, the AR, the fact that they owe us money, to be able to pledge as collateral to get money. So for example, I started this by telling you, I just got approved for $300,000 loan. Look, today, literally, it's just sitting in my inbox. And so from this, we pledged our AR as collateral to get the loan. So we just basically said, hey, our clients owe us like $1 million over of AR. We want to pledge that as collateral. And surprisingly, we got the deal approved within only 2 weeks' time. So AR is a perfect type of asset you can use. Inventory can work as well. So there's lenders out there that will actually fund 100% of the money you need to sell online. So let's say I'm selling widgets. If I'm selling widgets online, they'll crowdsource the inventory and pay for the inventory for you. There's other lenders that will help you borrow against inventory you already have and give you a credit line or fund the money that you need to get inventory. We've got residential flipping, house flipping, all kinds of programs out there to get the money you need to buy and flip homes using the home as collateral and even being able to get 100% of the money you need to buy and rehab the actual property. We've got commercial real estate financing. We've got financing where you could buy the property that you're leasing. And then actually it goes from an expense to an actual income because you could rent out the other units in your building you're not, that you're not in, and then they pay you rent. And then all of a sudden you went from paying $2,000, $3,000, $4,000, $5,000, $10,000 a month in rent to now getting $10,000 a month in rent in return. So vehicles can work as well. Almost any kind of asset, stocks, bonds, 401ks, IRAs, equipment, inventory, like AR, purchase orders, vehicles, real estate, whether it be commercial, residential, all these things can work for financing under this C of collateral. Now let's talk about using credit. There's 2 types of credit that we can use. That's the other C. We talked about collateral. We're going to talk about the second way to get money, credit. And there's 2 ways we can go. We can go consumer credit scores being good, or we can go commercial credit building, right? Business credit building. So let's decode both of these. So if your consumer credit's good, then you want to go through a program called Credit Line Hybrid. Real simple. You can get usually up to $150,000 in credit lines. A lot of them report to the business credit reporting agency. So we're building business credit at exactly the same time. Okay. And Dinesha Lockett, get in here. I love it. She's sharing. I love that Teresita is sharing this with everybody. And please do. If you're getting value from this, just hit the share button. Let's help as many people together as we can. It's what we do as entrepreneurs. And don't forget, I'm not neglecting you. I literally have 100 comments, questions in here already. I'll get to them in the end. It's just, if I did, we would be here for 5 hours. I'm trying to be cautious of your time because I know how important it is. So Credit Line Hybrid, up to $150,000 in funding. No doc. So what no doc means is it means you get it as a startup. There's no bank statements. There's no tax returns. There's no P&L, balance sheets, none of that stuff. So I can get this thing as a startup. I can get it as an existing business. You get 0% rates for up to 18 months. You could take the cash out at 0%. Let me give you a real user case study here. A lot of our clients use this for real estate investing. They come in, they get 100,000, 150,000 in funding at 0%. You can't use credit lines and credit cards to buy properties. Title companies won't let you close that way. So they liquidate them. They take the cash out at 0%. Unheard of. Only one place it's possible. This program, Credit Line Hybrid. It's called Credit Line Hybrid for a reason. It's a hybrid between a credit card where you get 0% rates and a credit line where you can take the cash out. You put those two together, you get a program where you can take the cash out at 0%. Absurd. One of my favorite programs of all time. So real estate investor comes in, they use this, they liquidate it, they take the cash out, they buy the property, right? Then what they do is that they fix it up, rehab it, put two choices here. We could flip the property, or we could just rehab, or we could put a renter in there. They put a renter in there, they borrow, then they get a mortgage. Okay, so then they get a mortgage to actually leverage the house that they bought free and clear with the actual Credit Line Hybrid. Now that frees up the Credit Line Hybrid, then rinse and repeat. They buy more and more and more properties this way. So this is very common way that we see Credit Line Hybrid: cash out, 0%, go buy something you normally couldn't buy with a credit card or a credit line. In this case, example, property, right? And then they come in, they fix the property up, they put a renter in there. Again, you could flip the property at this point. If you're going to do that, we got to talk about the flipping property financing. So there's a lot of options for you. If you flip there, but you could either flip it or you could put a renter in there and then rinse and repeat. So one of my buddies, Brandon, this is his strategy. The guy travels all over the world, and this is how he does it. He basically comes in and buys properties this way. Another one of my friends, she's 38 years old. She's retired. She's retired. She basically did the same similar strategy and bought Airbnb properties. Now owns a bunch of Airbnb properties. The money she's made paid down the mortgages, so they're all owned free and clear now. And she just literally lives off the rents. Now, if she wanted to, she could leverage, and she will. This is the way she works, right? Is the housing market's not good, and the housing market dips down. She'll leverage those properties, borrow against them all, pull the cash out, and start mass accumulating more real estate. So these are just examples of what you can use Credit Line Hybrid for. Okay, so pretty easy to get approved. All you need is a good FICO score. 680, 700 plus FICO score. You have to have some established revolving credit on your credit report now. How high your limits are now on your existing Visa card, MasterCard, whatever it may be. That's how high of amount you're going to get. You can usually get about 5 times the amount of your highest credit limit. So if I've got a Chase credit card for $10,000, I'm going to get 5 times that, roughly about 50 grand with this program. If you have a bunch of inquiries or your utilization's high, it will adversely affect that. But again, that gives you an idea of how much money you can get. Here's another best part. You don't have to use your credit. You can use somebody else's instead. Remember, 75% of business owners get money from family and friends. So it's easy for me to go to mom and dad and say, hey, I need to start a business. I want to grow a business. I need money. And my dad says, okay, I'm going to get you 25 grand. Dad has to go sell stocks, pay penalties, da. But if I say, Dad, I just want to use your credit, get this program called Credit Line Hybrid. I get credit lines. I build my business credit so it doesn't hurt his consumer credit. And the only way Dad loses is if I default. Doesn't have to be mom, dad. It can be other person in my circle that wants to get a rate of return of what I'm doing. Okay, look, I'm a pretty proficient entrepreneur. I'm pretty successful, right? I built multiple 7- and 8-figure businesses. The people in my circle, when I go to them and say, I have an idea, they listen. And if I go and say, I'm going to launch a business, if you want to get in, here's the terms. I need to use your credit to get a Credit Line Hybrid. I need to use your assets to be able to borrow against. You're going to get this rate of return. A lot of people in my circle are going to do that. They want a place to put their money where they're going to get a rate of return. And I'm somebody they know they would trust that money to in running and launching a business. They know how much due diligence I do to even thinking about a concept, a niche before I launch something. So the reason I'm telling you this is that there are people around you that you do not even realize want to invest into something or someone that will leverage their credit, that will leverage stocks, bonds, all these things that can be leveraged to be able to help you get the money you need to launch businesses. So not only does all this funding work for you, you got to think about all the people around you that can be a guarantor, that can have these kind of assets that can help you as well. And Colleen, what's up? Thanks for sharing and bringing everybody in. Gene, thanks for sharing and bringing everybody in as well. I appreciate that. And McDonald, I don't know if I spoke that or said that right or not, but hello, thanks for coming in. You gave like a bunch of diamonds. I love diamonds too. It's awesome. And here's examples of like $60,000 of credit line hybrid. This guy got like 60 grand, and here's like 30,000 worth of approvals, 61,400 that they got using credit line hybrid in situations where they're starting a business. They can't even get money somewhere else. So the other side of the coin is business credit. Okay. And here's how it works. We can have good consumer credit and give personal guarantees and get programs like credit line hybrid, or we could not have anything to do with our personal credit and build business credit too. So we could build a business credit profile and score. And I describe business credit as a way for your business to fund itself. Let's say your credit sucks on the consumer side. That C is gone. Let's say we don't have any collateral or no one around us has assets we can use. That C is gone. Now we're starting a business. We don't have cash flow yet. Now my 3 C's don't exist. I don't have cash flow. I don't have credit. I don't have collateral. What do I do? Well, everyone in the world out there, the gurus are going to say you're screwed. You don't get money if you don't have a C. That's not the case. I'm going to tell you the secrets behind it all. That's when you build business credit. Business credit's a way for your business to fund itself. It's not based on cash flow. It's not based on credit. It's not based on collateral. You don't need a C to get this beauty. Anybody can get it. And with business credit, you're basically coming in and building a credit profile for the business. You're building a credit score. You're using the profile and score to establish as leverage to then be able to come in and get all kinds of other money. So startups can get it. All you really need is to get starter vendors, places like Uline and Granger. You build your fundability. We're still going to talk about that a little bit today. We get these starter vendors. This isn't the training to map out all of this for you today. I'll give you a shortcut as we get near the end of the training. Plenty of training that I offer on this as well. But we get starter vendors, Uline, Granger. They report to the reporting agencies in 30 days. 60 days, we'll say on average. If you don't know what you're doing, it takes longer because you might get sources that report quarterly instead of monthly. But then they report to the reporting agencies, credit profiles established, credit scores established, all for your EIN, not your social. Now we use the established credit profile and score as leverage to start coming in and getting all other kind of credit. Now, you don't need cash flow. You don't need credit. You don't need collateral. You don't need any of the stuff to get any that you normally need to get funding to get this kind of business credit. So here's what I mean by this. There's people that have built their business credit. You can see their scores. Here's an Amazon account here for $3,500, another Amazon account for $7,500, Pilot Flying J here for $1,000 weekly or $4,000 a month. Here's a $1,200 gas card. Here's a $10,000 account right here. Looks like a Home Depot account. Another $1,000 approval, $3,000 approval here. Here's a Sunbelt approval. Another $10,000 approval here from Sunbelt Rentals. A Chase approval here, 0% 12 months. A Valrio, a bunch of credit cards, no personal guarantee. You get the idea. I still got more to show you, but I just wanted you to get an idea of how this works. So per SBA, the limits on these accounts are 10 to 100 times higher than consumer credit. Pretty good benefit. Another benefit is that you build 2 credit profiles, so you have twice as much credit. I can get a Home Depot credit card, as a consumer. I can go to Home Depot and get a credit card. But if I go back in tomorrow and say, I want a credit card, they say, Ty, you already have a Home Depot credit card. You don't get a second one. But I can go in today, get a Home Depot credit card, then go back tomorrow in my business name and get another one. So I say it gives you more than double the borrowing ability because I got consumer credit, I got commercial credit, and I can get the credit for both of these reports. But it's way better with commercial because the limits are way higher, like 10 to 100 times higher per SBA. In my world, people start building business credit with $2,000 to $5,000 limits. That's where they start. In 30 to 60 days, they're at 10,000 plus in limits. I'll give you some tips to get those limits up higher today as well. And then 30 to 50,000 is where we see people end up. Have you ever had a $30 to $50,000 individual limit credit card? That is common in my world when people get to the later tiers, and we'll talk about that today. And again, 5 to 20 grand is pretty common even in the early tiers, right? You get approved even when you can't get financing. We talked about that. And again, a huge competitive advantage when you have it because most business owners don't. And the other thing to keep in mind is that you can get it if you own a business in the United States. It doesn't matter if you're in a high-risk industry. It doesn't matter if you're a nonprofit. You can get it in many different industries. Okay. And you don't have to buy bogus trade lines. You don't have to buy shelf corporations. So many people I intercept that try to do this. And I'm like, do not do that. That is not going to help you. It's a complete waste of money. And today's training is too short to be able to go through all that. But again, you don't have to do any of this stuff to build business credit. You just need to know the formula, which I oftentimes decode for you. Also, Business credit quality determines if you get approved, how much money you get, and the terms you'll pay. I talked about this in the beginning. If you want to get this the right way, get the most money at the best terms, you got to build your business credit. And because this is what they see. Credit bureaus will issue you a failing credit score even if you have no credit. So here's an example of an Experian commercial credit report. We see all zeros here for credit that people have gotten. And then we see that they're only being recommended for $1,000 worth of credit and a 6 financial stability risk score. Let me show you, explain what that means. 0 is the highest risk. 100 is the lowest risk, right? Financial stability risk score literally depicts your risk of going bankrupt, ceasing operations, closing your doors is how it's defined by Experian. So a 6 means you're about as close as you can get to high risk of failing. Your business is going to fail. It's going out of business. But here's what's crazy. This person didn't do anything wrong to get a 6. They just have no credit. So the minute the reporting agencies know you exist and you don't have any credit, you're in trouble because they're going to give you this. Now you're going to get a loan. You're going to get a credit line. You're going to get a credit card. You don't even realize that this is what lenders and credit issuers are seeing behind the scenes. Then you get denied and you're like, I don't know what happened. How did this happen? How did I get denied? Well, you got denied because your business credit sucks. Well, I don't have any business credit. Yeah, that's why it sucks. Because the credit bureaus are saying that the fact that you exist as a business and don't have it makes you as bad of a higher risk as you can get of filing bankruptcy. That's not my opinion. That's the mathematical scores that they come up with. And all these bureaus are the same. Equifax is the same way. They'll give you a failing score if you have no credit. You can see how high of a risk somebody is. And look at the fine print. Why is their score a 6? Experian, lack of active trades. So Experian's even telling us, we think they suck because they don't have any trade lines. We think they're going to go out of business because they haven't figured business credit out yet. And because they don't have access to this money, they're a real risk of failing. And this tells us something. Why is Experian saying with no credit available that we're high risk? Because the economy changes, because inflation happens, because recessions come up like possibly 2022, 2023. Okay. And because of that, they know that the people that fail are the ones that don't have the financial preparedness. It's why PPP loans came out with COVID, because the government knew that the whole business economy was going to crash if they didn't put the money in to help businesses navigate the actual crisis. Okay. But when we look at the mortgage crisis, that never occurred. Businesses weren't bailed out. And it took us a really long time to recover. And a lot of businesses failed. Because again, how much money we have available determines our ability to navigate difficult times. It's why you should be looking for money right now as we see war and we see gas prices going up and we see that it's all this record high inflation, right? Gas prices, highest that they've ever been in U.S. history. Inflation, highest it's been for like over 30 years. I'm not a doom and gloom guy. I'm not a prepper, but I can clearly see signs. I literally have a test in my phone to do regularly every month to check on economic conditions for impending recessions based on every book I've ever read on the topic. And it all does not look good for us. So this is what the credit bureaus know. They know that if we're not financially prepared, if we don't have access to credit, we're a real risk of failing. And that's why we want to build business credit, because it doesn't just make us look better to lenders. It gives us access to the money that we need to succeed when things don't go right. But here's the great news. One account added to your business credit report. You can see this Uline guy right here, packaging, takes us from a low score to a high score. We were at 28. Now we're up to 96. We were at a 6 financial stability risk score, 5,500 or 55 now. We went from low risk or high risk to low risk because we added one freaking account to the credit bureau. One. It's the difference between no accounts being added and one account. It's the same as when you file taxes, which you're about to do. You got to understand that if you show $1,000 worth of profit, it's a night and day difference in my world and the funding world between $1,000 worth of loss. Remember, when we started this training today, I said it's the little things that will get you. This is a little thing. Having no accounts on your business credit reports versus one is all the difference between you getting approved for credit and financing. Showing no profit on a tax return and showing a little bit is all the difference between you getting term loans and SBA loans. It's the little things that will always get you. But here's where things get really interesting, okay? We can see, by the way, that this is, it's kind of covered up, but you can see they went from a low score to a high score. So that one account got added, boom, low score, high score, high risk, low risk, all because one account got added. But here's where things really get interesting, Okay. And I showed this the other day in a training in a way that I've never done so before. So let me walk you through this. This is the box at the top of a commercial credit report. And there's three things that are in it. And these are the three things that Experian, which, they kind of know something about credit, right? They're Experian. It's the three things Experian says, these are most important lender, most important credit issuer. I'm going to show you in your computers what's absolute most important. There's three things that are important. There's IntelliScore, okay, which is how you pay your bills. We've got financial stability risk score, your risk of going bankrupt. And we've got a credit limit recommendation. This, how much money you should give this person. So remember in the beginning, I promised you that I was going to show you how to get more money. This is the key. So the credit bureau is telling credit card issuers, is telling lenders how much money you should be given. So our goal today is to tell the credit bureaus, to tell the lenders and credit issuers to give us a lot more money, right? By doing so, then we go get a Chase credit card and the credit bureaus and the bureau says, hey, give this guy 20 grand. And Chase is going to obviously mimic something to do with the recommendation, because if you look at this, it's one of the most important things Experian is telling them. So here's where it gets interesting. $1,000 was what I showed you on the very first image today, somebody that had no credit. Then I showed you somebody that added one account. And look at this. They went up 22.5 times, $2,500 recommendation of credit because they had one account on their business credit reports. But this is what we've noticed helping 50,000 people through this. Look at this credit limit recommendation, $7 grand. And by the way, 27 and 29 scores, not good scores at all. But they've got $7,000 worth of recommendation of credit. Look how many accounts they have. 2. Check it out. This person gets recommended for $16,000 in credit. 1, 2, 3 accounts. Then this person gets recommended for $66,000 in credit. 1, 2, 3, 4 accounts. Now this person is where we all want to be. I don't know about you, but I want to be this guy. $725,000 recommendation of credit, and they've got about 20 accounts on their business credit reports. What we found, clear congruent between consistency between how many accounts somebody has on their business credit reports and how much the bureaus recommend they be lent. So all we have to do to get more money is we need to get as many accounts reporting on our business credit reports as possible. We want to take ownership and start building our business credit. Then that happens. We add more trade lines, payment experiences, whatever we want to call them. They go by a bunch of names. More accounts show on the business credit reports. Recommendation of credit goes up. Lenders, credit issuers start giving and wanting to give us more money because the credit bureaus see two things. Very important here. One is what I just showed you. You have a bunch of accounts on your business credit reports, but 2 is important too. And 2 is how much of the credit you're actually using. You don't build business credit to build business credit. A lot of people screw this up. They come in, they're like, hey, what's the bare minimum I can spend? Well, you're asking the wrong question. Instead, you should be asking, how do I get accounts I really need to use to grow my business so I spend more money because I have a need for that credit? Because when you use more money, then the limits go up as well. The recommendations go up. So if I use $100 on an account and I use 10 grand on an account, I guarantee the person that's spending 10 grand versus 100, that guy is going to get higher approvals as they progress through the system. So the moral of the story here is get credit you're actually going to use, because that's what's going to give you higher limits on your actual future approvals. So is this going to work for you? Well, again, business credit is the only solution you can get without credit, cash flow, or collateral, unless you want to sell equity in your business or you have some unique product or service you could go get crowdfunding for, or you're really good and you want to take the time to apply for grants. There are some other solutions that are out there, but for the most part, business credit's the solution if you can't get any other kind of financing, and obviously the solution even if you can, because it's what's going to get you the most money at the best terms. And by the way, I mentioned this earlier, I don't give you a look like this very often. And so here we go. Freedom of gas. I like that. I need 2 million. Brandon. All right. So I like everybody in here. Yeah. Brandon Coleman. And Gene says, yeah, Brandon Coleman. This is one using the strategy out there with using credit line hybrid to actually be able to get money and flip real estate. So here's Facebook. They've got 40 trade lines here with Experian. We see Dell's got 83. We see Microsoft has 131. Apple has 138. Pilot Flying J has 153. Publix has 171. Walmart, there they are. 80% of what Walmart sells, as I mentioned, they sell using business credit. What I mean by that, and by the way, if you've ever read Sam Walton's book, and I love Sam Walton's book on founding a Walmart, he'll tell you the very beginning history of back in the 70s when he would sit in front of somebody that he wanted to buy inventory from, and they would go in the back and check his Dun & Bradstreet credit profile. What Sam will tell you from the very beginning of building Walmart, he used business credit to do it. And today, Walmart still uses the same strategy. And what I mean, and I gave an example, is 80% of what is on the shelves they use paying business credit. So when you go through Walmart, count the items on the shelf. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. When you get to 8, know that all of those were bought on credit and only 9 and 10 they buy in cash. Matter of fact, business credit has more cash involved in Walmart than all shareholder value combined. It is the biggest amount of money in the company is business credit. So again, it's how all these companies scale to get as big as they are. It's how they're this big. Okay. Dell doesn't get approved for credit because they're Dell. They get approved for credit because when people pull their business credit report, they see 83 trade lines. They see all this money that they've gotten and paid back. And that's why people want to give them money. But here's where things get interesting. Mars Incorporated, they make Mars Bar. They have 22 trade lines here. This is a buddy of mine, Jose, in the consumer credit space. Very shortly after he started building business credit, he had 8 accounts within months. So he had a third as many as Mars Incorporated had. And here's a buddy of mine, the samples as well. And they actually had 14 accounts in like months of building business credit. So the company that makes Mars bars has 22. And these companies that are in the consumer tax space, high risk industries, they're building in this example, 70% of as many trade lines as the company that makes Mars bars. The reason I'm showing you this is that the big companies all use business credit to grow as big as they are. But you can see here that he works for startup companies, high risk industries. It works for us too. We just need to understand how to do it. And that's the advantage they have that we don't. They have CFOs, they have controllers, they have financial savvy people that force them down the road to building business credit. As entrepreneurs, most of us don't have that in our operations. So we've got to come here and learn these type of things to be able to do it. But it is how the biggest get as big as they actually are. Okay, here's an example of this. So this is Kylan Trower. He's an interesting guy, an interesting story. I'm going to tell you about it in a minute here. He says, quote, I believe the Business Finance Suite is the best step-by-step paint-by-number system to securing anywhere from 50 to 250,000 of business credit that reports on your business credit reports and helps you separate personal and business credit. What I like most, you have access to actual coaches that take you by the hand and walk you through the system, answer specific questions that you have related to your business. Just an amazing opportunity for small business. I show you this for a couple of reasons. First of all, somebody that's accomplished a lot of business credit. I'm going to show you multiple case studies today where people have got over $1 million in business credit and they couldn't even get a loan. Okay. And I'll give you real case studies. Kylan was interesting. He's a gym teacher, didn't want to be a gym teacher, got into business credit, built a business, and he loved it so much, he decided to be a partner and offer business credit financing. And last time I checked in with Kylan, he built a 7-figure, $1 million plus business from a gym coach to $1 million plus entrepreneur, offering business credit financing to entrepreneurs. And basically his entire system, which he teaches to our partners, he goes out to banks and gets their denials, offers them business credit, then built an outside sales force doing the same thing and built $1 million business. So again, a lot of benefits of building business credit, so much to the point where gym teachers become $1 million business owners offering it to people. But also, as he said, from going through this best paint by number system, step-by-step system to even get $250,000 or more in business credit. So let's look at some more approvals. Here's an Amex approval. Here's another approval here from BP, $16,000 MasterCard, JCPenney, $4,000, Sam's Club approval for $3,000. Here's a FedEx approval. Amazon credit limit increased to $5,000 and now at $10,000. So started at $1,500, now to $5,000, now then to $5,000, then to $10,000. Here's a $20,000 Amazon account right here. Here is another approval with Axel. I'm not sure what they do for $300 credit limit. Here's one that, and again, I'm going to show you big and small. I don't even know. That looks like a $10,000 Sam's Club approval, Bank of America approval. You get the idea, okay? And by the way, like if you haven't seen enough to believe that that's real, just go to creditsuite.com. If you go to creditsuite.com, you'll see something that says like credibility and that says approvals, and you can scroll and scroll and scroll and scroll. There's literally like hundreds of approvals that you can see on there, so you can really see what's possible for business credit. So let's talk about that third C. So far, we've talked about a 3C formula to get money: cash flow, credit, collateral. We talked about collateral-based financing, a bunch of ways you could leverage an asset to get money. Then we talked about 2 ways to use credit to get money: consumer credit, ours or somebody else's as a guarantor, And we talked about business credit or commercial credit as well, okay? And then we talked about the third C now, which is using cash flow to be able to come in and get financing as well. And by the way, Ayana, I can't tell you how much I appreciate this. Ayana, amongst many others, and Keisha are sharing people in this. They're sharing it with their friends to bring them in the stream. Very special thank you to everybody there. I appreciate it. And Octavio, thanks for coming in from El Paso, Texas. Okay, so now the best kind of financing or loan might not be a loan at all. We might actually want to leverage something we don't think about, which is just the fact that our business has consistent cash flow. And if our business has cash flow for 6 months, well, then that opens up financing options for us. The most common of which is the merchant cash advance. We could be lent as much as 15% of whatever we process in credit card transactions using an MCA. All we need is responsible bank account management and not have a bunch of chargebacks, like using with our credit card provider. So responsible bank account management means they want to see more money going in the bank than going out. They want to see that we've got positive ending bank balance, money in the bank at the end of the month. They want to see we don't have a bunch of non-sufficient funds. They want to see a lot of regular recurring transactions going through. These are things they'll look for. If we have that stuff, credit doesn't matter, collateral doesn't matter. We could very possibly get a merchant cash advance. These are approved for as high as $500,000. You're able to get one. We also come in and we look at, and I'm going to show you some up, but I want to give you some other options here too before I get to sum up. So another kind of financing here is called cash flow financing. With cash flow financing, they look at everything in our bank account that comes in, not just credit cards. They look at checks. They look at credit cards. They look at cash. They look at everything. Then we can be lent money against that. We look at PayPal, Square, Stripe loans. They'll give us as much as 30% of what we process with them annually. If I process 100 grand with PayPal, I can get a loan for 30% of that, which is 30 grand. And a lot of times just with one fee, $500 and no interest. We've got credit lines through places like Bluevine or Fundbox that just with 6 months worth of consistent revenue, we can get money from those, not based on consumer credit. I've got a $100,000 credit line with Fundbox. I help one of my clients in credit repair, high risk industry. He came in and got $30,000 using Fundbox. And he came to me for an expensive merchant cash advance. Even fast, easy money. I want a merchant cash advance. I said, no, you don't. That's expensive money. What are you going to use it for? We talked about it. I said, can I get you a credit line instead? He's like, yeah, that sounds good. So I got him a credit line. And then he used the credit line to do what he wanted. You know how much interest it cost him? 1%. His option was going to cost him 42%, literally 42% versus 1%. This is why you want to work with people that know what they're doing, because you don't know what to ask for. Like you go out and ask for the wrong thing, and then somebody's going to give you what you ask for. Okay, you want a merchant cash advance where somebody's going to make a bunch of money on you? They're going to give it to you. They're not going to talk you off that fence and push you into a program or recommend a program where they make no money, but it's better for you. So you got to work with people around you in your circle that you trust that can help you here. But those kind of credit lines, Fundbox, Bluevine. So all these are these funding options that work in the actual cash flow C. Another one are term loans. Term loans, 3-5-year term loans with 5%, 6, 7, 8% interest rates. Okay, those are another option in this cash flow financing space. Now, here is an interesting story. I want to explain to you in a minute why this is so important. So here's Somnol. Quote, my business is Dragon Gym martial arts studio that was founded in 1973 by my instructor, Diego, and took over by my partner and I 10 years ago. His partner's name is Lonnie. About a year and a half ago, my business partner and I decided within 18 months, we're going to open our second location. We got connected with Credit Suite. We were able to accelerate our timeline and open this location in 6 months instead of 18. Getting the financing meant that we could start fulfilling our dream to have 5 or more locations across the country. So here's why I show you this. Now that you've learned the 3 C's, I'm going to teach you something even deeper, and it's called stacking. So what you really want to do to get the most money at the best terms is you want to stack as many loans, credit lines, funding options as you can. Real example, right? I told you at the beginning of this and throughout, I literally just minutes ago before I started this, got a loan approved for 300 grand for Credit Suite. We're gearing up for what we believe is an impending recession. We also got a credit line, right? We're also getting a credit line. So that's stacking. We're going to get a loan. We're going to get a credit line. We're going to get all these different kinds of financing to maximize how much cash we have available to us. Somnov did this. He came to us, and what we helped him do was get credit line hybrid to start. Then we stacked business credit, credit line hybrid, and other funding products. The outcome was that within 6 months, instead of opening a second location, they opened 2 locations. So all of a sudden, they're like, we want to open 1 location in 18 months. When a third of that time, they opened 2 locations. Now they have 3. And now they're currently opening 3 more. So here's somebody that said in a year and a half, we want to open 1 more store. And we're like less than, I think, 3 years, somewhere about 2 years into this now. And now they've actually are going literally on their 6th location because they have access to money because we stacked different kinds of funding products. So it's why you want to try to work with a source that works with all different kinds of funding. It allows you to stack funding like this and be able to get more money. And you're able to see what somebody like this does to accelerate that. We want to open 1 more shop. Okay, we want to open 5 more. And that's where they are now. And it's really cool to watch their success. By the way, they also use the funding to open an online martial arts studio during COVID. So now they've got 5 locations and a whole online vertical as well, all using these different stacked fundings to be able to get there. So fundability, we talked about this as well. Business credit's one of 125 fundability factors, okay? And we talked about fundability. This is what lenders and credit issuers really look at to determine if you should get approved or not. We have 8 different pillars, and I might have the matrix to show you today, maybe not. But there's 8 different pillars of fundability that really account for about 125 total factors that lenders and credit issuers are looking at. And of course, the first 3 things that they're looking at initially is business ownership, business address, business name. You know, are these verifiable? Can they go to Secretary of State and can they just access this easily? If they can't, then the problem is you're not going to typically get approved. Okay, so that you want to make sure that all of your information is congruent. You want to make sure you have a website, an email address, and entity set up, and try to get a corporation or an LLC. You want to make sure that you have a phone number that's toll-free and listed with 411. We got to make sure offline and online that all of our information is congruent, it's consistent, it's the same way. Okay, and in doing so, that gives lenders what lenders want to see. Look, we don't realize this, but lenders, we try to go to a bank and get a loan, right? And so we're like, approve our loan, look at all the stuff and approve our loan. The bank isn't coming at it from that mindset. A bank is looking at the application and they're like, fraud or real. That's the first thing they look at. We don't even think about that. Like, we don't even think that our application gets submitted and then gets caught in what I call the fraud trap. But it gets caught in the fraud trap. What happens is if our stuff's not congruent, then what lenders and credit issuers will do is they deny the loan because like they don't think it's even real. They think it's fraudulent. And this is the number one reason that loans get denied. Number one, it's not your credit. It's not your income. They don't think your application's legit. They think it's fraudulent. So you're like, that doesn't make any sense. How does that happen? I'm going to take you down a rabbit hole, a 2-minute rabbit hole. I'll explain to you exactly how it works. This is just how messed up business lending is. So hold on for this ride. Okay, so here we go. Banks. Okay, so there's a third-party data aggregator called the Small Business Finance Exchange, the SBFE. It's owned by its members. Its members are banks. Chase, Bank of America, all of the largest banks are all members, and all but one of the largest credit card issuers are all members as well. The way that SBFE works, everybody has to openly share information with each other. Bank of America, if I apply and I fill out an application, then that application goes into SBFE, and then Chase and everybody else can see that same application. So first of all, we don't even realize that when we apply at one bank, all banks can see that data. They can. If Bank of America gives me a loan and doesn't report anywhere, Chase still knows how I paid on that loan because of SBFE. Okay, then we've got places like LexisNexis. LexisNexis gathers all this information about us we don't realize. Judgments that we've had through our lifetime. We think they're off our credit report. They're never off your credit report. They sit on LexisNexis. It's where the credit bureaus, when they reported judgments, used to go to verify that information, right? Every email, phone number, address we've ever had in our lifetime, business we're associated with, licenses we've had issued, revoked. LexisNexis is 300 pages. Okay, yeah, if you've ever seen this thing before, hold on, I'll give you one there. I'll show you. Let me see here. Okay, it only ever takes me a minute to grab it because it's the thickest folder. So this is an example of what I mean by that. Here's my LexisNexis credit report, just so you understand what I'm talking about, right? That's the thickness. It's over 300 pages long. Every address, every phone number, every car I've ever owned, the VIN numbers of the car, every insurance policy, that I've ever had issued to me. Every home I've ever owned, where I closed, the interest rate I paid, the rooms in my house, the type of AC unit that I had, my homeowners association data, it's all in here. This is the world. You've probably never seen it. Most haven't, and you can get it. And I'll tell you how we help our clients get it at no cost and go through it and fix it. But the bottom line is that lenders are pulling this thing, right? So now what happens is you apply and you have an application. The lenders take your application and they compare it to sources online. They first of all look at the other applications you've submitted to other lenders through SBFE. They're looking at your data and they're comparing it to your actual LexisNexis to see if the data is up to date and accurate. They're actually comparing it to Secretary of State to make sure all of this stuff matches. And it's all done for one freaking reason. They're just trying to prevent fraud. That's it. That's why it happens. So we don't think about this as business owners. We just care about getting our loan approved. But that's the reality of what's happening behind the scenes. So this is why we've got to come in and we've got to get fundability right. Because when everything's congruent, when we get LexisNexis cleaned up, when we go understand that we have a ChexSystems credit report and score that looks at how we actually manage our bank account, we understand the SBFE, we understand when we get pull the curtains back and understand how lenders operate, then we could make sure everything matches, make sure we don't get caught in the fraud trap, make sure we get all green lights when those computers are underwriting the application. It's how we get approved, not denied. Now, the other thing is, it gets a little bit more complicated, is that we've got to make sure we've got two of the right things here too. When we go to get money, we got to get the right lender and we got to get the right lender product. Don't worry, I'm going to show you how you can get this done. But you got to do both of these because, first of all, there's a lot of lending products out there. Think about what I just showed you today. 401k financing, IRA financing, stocks, bonds, right? Then we talked about equipment financing. We talked about inventory financing. We talked about cash flow financing, merchant cash advances. We talked about multiple AI credit lines like Bluevine. And we talked about Fundbox as well, right? We talked about credit line hybrid. We talked about, house reseller program. You get what I'm going with this. We talked about 15, 20 different kinds of funding. So you got to know which product works, and the 3C formula will help you there. Then you got to know the right lender. Some lenders hate credit repair. Some lenders will work with credit repair. We have lenders that work with credit repair because we do a lot of business and we earned their trust. And we said, hey, I got this company. They said, no, we don't do credit repair. I said, well, you should, because we think this is a really good applicant. Give us the benefit of the doubt. We fund millions of dollars with you a month. They say, okay, well, we're going to do it. And then we check back in 90 days and they say, that loan performed really well, actually better than most others do. I said, yeah. So take more. And now we've got lenders that just do the pod industry or they do credit repair or do these high risk industries. So certain lenders are the ones you want to go with. Others lenders are. So you got to have these two things figured out, because if you don't have the right lending product and the right lender, then even if you understand the 3 C's, it's going to be tough for you to get approved. So knowing that really is the key to success. Okay. Now, again, you can do some basic things with searches, but some of the stuff you want to look at is your industry. Hey, cash flow financing, credit repair. Merchant cash advance accounting firm. If you search with your industry, that will give you some guidance. I'm going to give you a shortcut here in a little bit as well. And again, you do some basic due diligence. There's a lot of lenders out there, a lot of them, tens of thousands. Better Business Bureau check, Google check, looking for rate or for rankings, looking for lawsuits, judgments. Pull the business credit report for the lender. You can do that easily. To do some due diligence research on them as well. Ask them questions like, do you actually report my loan to the business credit reporting agencies? As in actually my payments, do you report that anywhere? Who do you report that to? Ask them if, they put anything on your credit report that tells people that you have outstanding loans. You want to ask them these questions. Do they require a personal guarantee? Do they not? These kind of things will help you narrow down the best lending option for you. And again, last 3 details of the application process really have to do with the timing when you apply, lender negotiations. Do you do it online? Do you do it fax? All those kind of things. So timing, as I mentioned, matters. You want to get money before you need it, when you're desperate, when your revenues are declining, when your amount in your bank account's declining. Nobody's going to want to lend you money. It's one of the biggest red flags in my industry of lending. Okay. And again, do you want to have a personal guarantee or don't you? If you have collateral, it's easier to get away without guarantees. SBA loans, you're probably always going to need them. Some kind of cash flow financing, you don't. So this kind of varies based on product, but some lenders will have a guarantee sub 1 on certain products. So we got to think about that as well. The actual repayment terms, a lot of lenders will give you a choice with merchant cash advances and cash flow financing. Do you want to pay a higher interest rate and get a longer term, or a lower interest rate and shorter term? Almost everybody chooses longer term because that's what gives them lower payments. But keep in mind, you can negotiate some of these things as well. And this is why it makes sense for you to work with somebody that can help you. Okay. We fight these battles for our clients all the time. Hey, why did you give them, a 17% rate? Well, we don't like these things. Well, what about these things? These are what in lending we call compensating factors. What about their time in business? What about their consumer credit score? What about their business credit? What about these compensating factors? These should offset that. Yeah, you're right. Okay, we'll lower it down to 13. Wow, we just got the person 4% lower interest rate. So don't forget, you can negotiate in a lot of these cases. And also things to look at is, like I said, are they doing a UCC filing? Are they telling other lenders you have outstanding loans or not? What industry are you in? And do they lend to your industry? You need to know these type of things. What's on your LexisNexis credit report? Do you have a criminal record? Okay, I do. I didn't know it. Apparently I do. And I'll give you a real story about how this matters. We went to get our first SBA loan. They said, have you ever been convicted of a felony or misdemeanor? I said, no, I'm a straight shooter. Like, I don't do anything wrong that I get caught for. So then I'm coming in. I'm like, hey, I don't have anything. And then they came back and said, whoa, you do. You've got these 2 misdemeanors on your record. You need to write out a synopsis of what happened here, why it happened, and why you lied to us. I'm like, what are you talking about? I had to go literally, I swear to you, I pulled a background check on myself to even know what they were talking about. And they were right. I had 2 misdemeanors when I was like in my early 20s. I was in the military, and it had to do with a female police officer wanting to impress her, doing wheelies on a motorcycle. It was awesome at the time. I got to admit, it was really awesome and a lot of fun at the time. But I didn't know 30 years later it was going to come back and haunt me because it sat on my LexisNexis credit report, right? So this is why we got to get all this information. Another story that's congruent with this. They also wanted to collateralize my house. And we said, that's absurd. We have an AR of $1 million. Why would you need to take my personal home as collateral? Now, if you're applying direct, you might just do it because they're asking for it. But we questioned it. And they said, look, you got liens on, or you've got judgments on your LexisNexis credit report that we're uncomfortable with. And so I said, okay, pulled LexisNexis. Those judgments weren't even accurate. They weren't even true. I went to the court. I got proof that they weren't true. I got LexisNexis to remove them. I proved it to the lender. They removed the requirement for my home being collateralized. This is coming from a company that gets business credit financing. That's what we do. So even it doesn't matter how proficient you are. If you don't put all the stuff together I'm teaching you, then what happens is this is why you get denied. It's why you don't get as much money as you want. It's like why you don't get the terms that you want. But when you figure it out, this is where you actually come in and succeed. So how do you just make it simple? How do you just do all of this or have it done for you or help with where it's not complicated, where it's simple, where you can go step by step and make sure your fundability is online and have somebody go, yeah, you did it. Here, you messed this up though. Go fix that. Go fix that. Don't fix that. Make sure this is right. How do you get all the financing in one place and other people to negotiate for you? How do you get the funding where you don't never need to go to find the right lender or find the right funding product? How do you come in and build business credit in 6 months versus years? I'm going to show you exactly how our clients do it. And I'll give you one example of how all of this looks that I've taught you today tied together. So this is Josh Elledge. He's out of Orlando. Quote, one thing that's beautiful about Credit Suite is that it starts with baby steps. The first thing that we did is get a couple of revolving credit lines and store credit. Then we graduated to gas cards. Then we ended up getting a very nice line of credit at Amazon. Then we worked our way up to getting a very, very nice SBA loan. Thanks to Credit Suite, we were able to get our business finances in order from a, quote, what looks good, unquote, to potential lenders and potential creditors, and we became very attractive to lenders. The best options are always available to those who have the credit game locked down, and that's what Credit Suite platform allows you to do. We've been able to make smart investments in staffing, marketing systems, sales systems, product development, all of these things before Credit Suite we really couldn't do. I just don't have to stress as much because we've got money in the bank to take advantage of opportunities. I'm not as stressed anymore. I can keep a bank account that has plenty of cushion in there, and that cushion, just honestly, it makes me a better dad. It makes me a better husband because I'm not stressing out. So I always get emotional when I read this because it's very true. Having kids It's a hard thing, being entrepreneurs, we sacrifice our time. I don't know about you, but many nights I put my kids to bed and then I go back to work till 4 a.m, only to sleep for 2 to 3 hours to get up and do it all again, right? We fight the fight, but we do it to become like better there for the people that we care about, right? And so what I found is this rings very true. When you have access to money, when you've got hundreds of thousands of loans and credit lines and money available, you're not stressed. You know that whatever happens, you're financially prepared. And that stress does make you a better parent. It makes you a better significant other. It makes you a better friend because you're not stressed and freaking out all the time. But if you look at Josh's story here, it just walks you through it. We started with baby steps, right? We got a couple of revolving lines and store credit, vendor credit, revolving retail credit. He's talking about building business credit here. Then we got Amazon, more retail credit. Then we build our business credit. Then we got an SBA loan, right? That's the next status that we worked up to. Okay, now we got our fundability in line, and that's how we got it done. And we looked better to lenders. And the best options are always available to those who have their credit game locked down. And it's all about what looks good to potential lenders. So if you put it all together, here's the outcome. Now, the story of Josh is that Josh was kind of struggling in PR to find his way. He used all this money that he got. He found a really cool niche and building out LinkedIn lead generation for companies. And now he's at multiple 7 figures. No different than you. It's just a smart entrepreneur can do pretty ridiculously awesome things if they're armed with the best money at the best terms. And that's exactly what you can do as well. So as you can see now, you can get money with bad credit. We talked about a lot of ways to do it. You can get money even if you don't have collateral. We talked about the other C's that will get you there. You don't need to be an established business. We talked about multiple funding options today, including credit line hybrid and business credit you can get as a startup. You can get money if you've been turned down. Now you know why you're getting turned down and how to turn around and fix it. Your business can get business credit. Anybody can. I showed you a bunch of examples of that today. And you can get money without a personal guarantee. The keys to build business credit, we gave an overview of that as well today. So look, you're probably watching this webinar on your computer, phone, tablet, live stream, social media channel, because you want the easiest and fastest way to get money and credit to grow. And probably if you're like a lot of entrepreneurs, statistically, you've struggled to get the money and credit you need. And you're looking for a simple solution, a switch that you can flip to be able to get what you need. Well, I think, and what our philosophy here at Credit Suite is you should be able to get the money you need when you need it. But if you don't know the approval standards, the fundability standards, if you don't know how to build business credit, if you can't access all lenders and programs in one place with guidance, well, then that's what's holds you back. So that's actually what we can help you do. And we can help do all of this with you and for you because we've got a solution called the Business Finance Suite that does all 3 of these things. It improves the fundability, it builds business credit, and it also helps you through the process of getting financing. Now, you might not think, well, I know, but my business won't work for me. I'm in some high-risk industry. I flip goats for a living. I don't know. Goat flipping could be a thing. I don't know. Maybe it is, maybe it isn't. But somebody, hopefully maybe somebody during this before I'm done will have a goat flipping meme. That would be great. Okay. So again, you might be thinking this might not work for me. Okay. But anybody can build business credit. It doesn't matter what industry you're in. If you have a business in the United States, you can do it. And you might be thinking, well, look, I mean, I'm trying to tackle this on my own and putting hundreds of hours because I can't afford to work with a company like you. But you're going to see right now that if you do have an interest in working with us, how affordable it could be. And by the way, I mean, I've showed you testimonies and case studies from today that people have got over $1 million in money through our system. They've launched 5 franchise businesses. They've went from gym teacher to multi-million-dollar business owner. So the question is that if you only got 30 grand, 32 grand using what we talked about today, I don't know, could that make a difference to your business? What kind of difference would that actually make for you? So how do you do this? Well, our Business Finance Suite walks you through everything to do with fundability. Improving the fundability, building business credit, getting financing, and it combines our technology, our step-by-step technology with our advisors. They coach. They're not customer service. You can call them if you want. You can email them. You can chat with them. But they coach you. They call you. It's printed. They're coming to you and saying, hey, let's go through this together. So they're holding your hand and saying, oh, don't do that. That's where everybody screws up. Do this. Oh, this is messed up. You got to fix that. That's why you're getting denied. And I can't tell you how many people, like the samples I showed you, they came in and built business credit and had 70% as many trade lines as Mars Incorporated. They got denied for all this money. And the one thing they did was we figured out there was something wrong with Secretary of State. We fixed it. They went and got a loan approved that they had previously denied and an Amex card they had denied to a no limit approval. on Amex because they fixed one fundability thing. So that's what coaching actually does with you through the process. So we walk through and help you set up the fundability before you apply. We make sure that your NAICS, do you know what your NAICS code is? Is it right? Is it low risk? We walk you through that. We help you figure out the right industry code for your business and get it set up where you're not high risk. We help you set up your entity, your EIN the right way, the business address, the phone number. We even list your phone number in 411 for you, which costs $360 a year. We pay for that even for you. We help you with setting up your website, your email address, your licensing, your compliance check. Lenders are going to do bank account, merchant account setup. We walk you through all the fundable foundation stuff that lenders and credit issuers are going to look for. We help you get your DUNS number with Dun & Bradstreet. They'll try to charge you $1,500. It doesn't. We're going to get you through the free path so you don't have to try to get sold by them. We help you fix inaccuracies with all three reporting agencies. So not only do we help you build business credit, we help you fix it. We help you get your BIN number with Experian. We help you set up your initial credit reports and scores with all three reporting agencies. We have the largest access to starter vendors to get credit you actually really are going to use to build your business credit. We have the largest access to store credit, almost every major retailer you could think about to build business credit. Here, look, this is what this thing looks like. Okay, so you can see these are all accounts that our clients are using to build business credit. Every single one of these guys has all the underwriting requirements actually listed. You're able to come in and be able to get starter vendors. You're able to get store credit. You're able to get Amazon and Walmart, and you're able to come in and get gas and fuel cards at places like this. There's Lands End. This is literally a Lands End shirt using our business credit. You can get phone solutions, all without personal guarantees, all without personal credit checks. We tier it out and map it out step by step so you don't fail. So you're only applying for credit you're really going to get. You can see the Visa card, the MasterCard financing here. We can get computer leases. We can get financing. One of our clients, Christine, got $185,000 financed at Ford, $185,000. No personal guarantee and credit check. So we can get you financing Ford, GM, Ally, Toyota, all this kind of Visa card, MasterCard, or what we call cash credit as well. Okay, there's a lot of accounts that we use called advanced vendors that we can get you as well, that are ones you can use to build your business. Places like United here. Some of them, a lot of them, these don't report to the reporting agencies. That's what makes them advanced vendors. But you can get all this credit without a personal guarantee and credit check just by knowing the actual underwriting requirements, of which, again, every one of our sources, we tell you what to apply for, what order to apply. We give you underwriting guidelines for every source so you get approved. And you're not going through this on your own. You're actually working with our advisors to access Visa card, MasterCard, fleet credit, auto financing, all without a personal guarantee, without a personal credit check. We have cash flow financing that we talked about today. We have all the asset-based financing. We have the credit-based financing that we talked about today. We work with private money, alternative SBA lenders, venture capitalists, angel investors, term loans, lines of credit. Here's why. What I found when I founded Credit Suite was that if you don't know where to go, you're so screwed. Like, there's no way you're going to go online and figure this out. But there's really no sources that pull together everything in one place where you can go and get your business set up the right way and build your business credit and access all loans and credit lines through over 1,000 funding sources. Lendio of the world works with 75. Our website will tell you they work with 75 lenders. We have over 1,000 in our database because we pull together everything where it's all available in one place. That way you don't struggle to get the money that you need and deserve to have. So when you enroll, this is a look of what you get with us. You're getting 24/7 access to the finance suite. You can build it in English and or Spanish. Business coaches that walk you through the process, help setting up your name, your entity, your EIN, your address, your phone number, your website, your email, your bank account, your merchant account. Set up with the reporting agencies, DUNS number with Dun & Bradstreet, BIN number with Experian, the disputing of negative items, the largest supply of vendor credit, retail credit, fleet credit, cash credit, auto financing. All the different types of financing are available to you as well. And look, we hung out together for over an hour. It'll be an hour and a half here. And I want to make it worth your time if you are interested in working with us. So I got a $10,000 bundle that we're going to get you if you're interested in enrolling with us this week. And by the way, you're going to be shocked at how ridiculously affordable it is to work with us, cheaper than doing it on your own. But I'll get to that in a minute. So we're going to give you a Celebritize Your Brand bundle here. This is from the world's #1 branding expert, Ray Perez. This is a little off because he's now actually throwing in another thing worth $500, actually your own branding website contact card that you can give to people with links to all your social channels, website. You've got special tickets to his branding workshop event. to grow your entire brand. It charges $1,000. It comes to you at no cost. A message maximizer here from Dolores Hirschman. It's basically how to get your message matched with your ideal customer to be able to basically increase your closing percentage. Delegate and manage. Look, the number one thing you need to do in starting a business is you got to get good at automation and delegation. And Howard Shore charges $800 for these courses. He's a buddy of mine. He gave us this for free, and I'm throwing that in as well. Entrepreneurial Elite Toolkit. Gino Wickman has written 2 books, one called Traction. Our entire company rate is based on the EOS system that's taught in Traction. A lot of big companies are. And he also has a book called Entrepreneurial Leap. He's given us $800, including 11 resources that you're getting with enrolling today as well. 1, 2, 3 roadmap for startups, My Vision Clarifier, My Business Match, Find the Right Niche, these kind of things as well. Accounting Secrets Blueprint. Look, we all suck at accounting. Entrepreneurs, I don't know what the deal is, but we do. And so the nice thing here is that we're able to come in with this and not suck at accounting because we get all the basics that we need without having to pay somebody to actually, an accountant, to give them to us. If you are invested in real estate and you're interested, this is a 100K real estate payday from Derek Vaness, best-selling author, investment guru that teaches you how to make your first 100K in real estate. Fundability in a flash. We'll spend 30, 60 minutes with you on a fundability call to get your fundability done. We're going to give you D&B, Equifax, and Experian credit reports for free for 90 days. Real simple. You go to the bureaus. They're going to cost you about $250. So with this, you're getting $750 worth of credit reports at absolutely no cost. After that, it's only $24 versus $250, so a 90% discount there as well. We're going to give you a Business Builders bundle. Look, a lot of people ask us for help with building their business, but that's not what we do. Like, we help you get money, not build a business. So we went and found the gurus in this space, and we put together over 30 courses, guides, blueprints, tools for generating leads, branding, marketing, advertising, building funnels, product mastery, social media mastery, viral video. We went to all these people, negotiated to get it at a ridiculous price, and then we paid that. And now you got a bundle of over 30 of these courses, toolkits, guides that you need that will actually help you succeed with branding, building your business. You can evaluate your business at any time to see how much it's worth with our valuation tool, which is part of your system as well. So that's $10,620 worth of bonuses. Here's what that looks like. You're going to get that through Friday as well. So we put this all together. Here's our value. Over 12 grand of stuff that you get just from working with us, over 10 grand in bonuses, a lot of value. They're over 22 grand. And if you're getting started with us Friday, you get it for 7 payments of $597, or you can also do just 1 payment of a little shy of 3 grand. And if you can't afford that, don't worry. I'm going to fix that problem for you right now. We'll work with you and customize payments to make them affordable. Okay. We'll also work with other providers that can finance it for you. Don't hold me to this, but I'm going to give you an example. We got a provider that often finances our clients. And if you got about a 620 FICO score, or somebody else will guarantor, is a guarantor that does, then they'll finance it on a longer term. And we've seen payments less than $100 financing through them. So again, super affordable. We've even got off website programs like Genesis, where you don't need our advisors if you're already part of this process. And it's a pay-as-you-go, really cheap monthly subscription as well. So for any reason you can't afford the payments, it doesn't matter. We'll work out customized payments. We'll finance it for you. We'll get you into other programs where it makes sense for you to be able to do this. And also keep in mind that even when you do finance, we give you everything, all of our advisors, our tech, everything, the full 3 grand plus you would pay, you get right away. So over 12 grand worth of value, 10 grand worth of bonuses, you get immediately when you enroll. Okay. It's not like we make you make all your payments to get all that. So it's really risk-free because you're getting it all in the very beginning. And you got to ask yourself a couple questions. We usually save 18 to 24 months off the business credit building process. What does that mean to you? Meaning if you got business credit, you got Visa card, MasterCard, auto financing, computer releases, $20,000 Amazon accounts. If you got all of this 2 years sooner, what could that mean for your business? Something to think about. And also keep in mind, it literally is cheaper to work with us than do this on your own. Okay, we get it so you don't have to pay Dun & Bradstreet any money. We get it so you don't have to pay for a 411 listing that's $360 a year. We pay for that. You don't have to pay for valuations when you want to know how much your business is worth. We literally just got one done. It was thousands of dollars. That stuff is actually part of our system. So not only is it faster to work with us, but it's actually cheaper. And I say that because usually you have to make a decision between time and money. With us, there is no decision. Like, you save time and you save the money in doing so, and we make it ridiculously affordable to be able to do so. So again, a lot of value you're getting, everything you need help with fundability, getting financing, building business credit, a lot of cool bonuses, over 10 grand worth of bonuses that you're getting as well, all for 7 payments of $597, 1 payment of $29.97. Don't forget that we also can finance that for you, get it even cheaper, and free Experian, free Equifax, free DMV credit report for a month, fundability assessment, finance assessment. I told you I would tell you how to get it. All you have to do to get it is give us a call, 877-600-2487, or email us, info@creditsuite.com. You can go to grab the deal with the bonuses at creditsuite.com/webinar. Anybody that goes there and enrolls, you'll get an email with a deliverable of all of your bonuses. So all of that will come to you as well. So I don't know, I think it makes a lot of sense. If you think that maybe I might know a little bit about what I'm talking about, then, give us a shot. Because my whole mission and our company's whole mission is just to empower entrepreneurs with the money you need to succeed. And I can sit here for 7 hours and tell you story after story after story of people that, like one of our clients, Dolores, who had a tow truck, wanted $80,000 to build the fleet. We got her 8 grand. She wanted 80. We got her 8. She bought another truck. We got her more money. She bought another truck. Within 2 years, she had a fleet of tow trucks on the road. She went from a 1-truck operation to a whole fleet of tow trucks and grew a multi-million-dollar business when she couldn't even get any money. And we helped her through that process. Christine's one of our clients, over $1 million in business credit. Paid multiple companies to build business credit, tried to do it on her own, all failures, credit issues, couldn't get the money that she needed. We got over $1 million worth of business credit, $185,000 financed at Ford. And last time I checked with her, she was buying a 50-truck operation, from a 1-truck operator to a 50-truck operation owner. This is, I can go on and on. I can sit here for hours and tell you these case studies. You can go to our website and see case studies, real approvals, and a lot of these things as well. We got a lot to cover. I mean, I've got a ton of questions to be able to get through. And I told you I was going to hang out here. I've got a little bit of time. I've got about 30 minutes before I got to start another webinar. So I'm going to come through here and say hello to as many of you as awesome and answer any questions as I possibly can. Corey says, yes, sir. Thank you, Ty. I went to YouTube to find Shelf Account and Google, looking for shelf accounts and getting knowledge pertaining to this. Your video, your video, Credit Jail, came up, and I've been rolling with you. Yeah, it's good, because those are things that can get you into a lot of trouble there if you're buying shelf corporations. So we don't want to get that. A great discussion. I appreciate that. Thank you very much, Crystal. Hey, Columbia, South Carolina was in the house. Thanks for coming in and saying hello. Again, everybody, this is what happens when you share. Just so you know, I completely can see people like this, Gene here, who's awesome, sharing with all these people, bringing them into this train. And I appreciate that. Hopefully, Steve, my buddy Steve, you're always here. Hopefully, you were able to figure out the solution here today to be able to get the $2 million that you need. And DL says here, does the number, DL's here oftentimes quite a bit too. I'm going to take that off the screen because I can't read it apparently. Does the number of accounts also help you get bigger lines on the personal side of credit? It doesn't really. On the personal side of things, it doesn't, but getting more credit lines on the business side will help you there. Okay, Crystal says, how do personal loans send in the mail work? And again, they use service. You can get a personal loan to start a business. They're oftentimes based on your income. So Lending Club basically looks at your income, your debt ratios, and it looks at your credit score. That's how they actually make those decisions. And yeah, outside of all the options we talked about today, those are absolute ways you could use to be able to fund your business is true. And this is one of my favorite groups right here. And here we come from Asha sharing, done is better than perfect, Free Business Academy. I love this group. If you're not part of it, you should go look it up on LinkedIn or Facebook. It's one of the best groups I think that exists on Facebook, period. And Funbox here, we in the chat, we've given you some links to some of the stuff that I talked about. I need a replay. You're tuning in. If you want a replay, if you're part of our webinar, it's going to be sent to you automatically. If you're tuning in from a live stream, just go to facebook.com/Credit Suite. If you're on LinkedIn, it's on my LinkedIn profile. If you're on, wow, just completely blanked out there. So if you're on LinkedIn, you can get it from my LinkedIn profile. If you're on YouTube, it's on our YouTube channel, youtube.com/Credit Suite. If you're on Facebook, if you go to facebook.com/Credit Suite, that will give you access to the replay of this as well. Can you remove negative items from LexisNexis? You absolutely can. Matter of fact, that's one of the services that we work with our clients. So if you want to take a look at what we do here, if we come into the fundability step of building business credit, then we actually do that for our clients as part of the fundability process. So we're actually coming in and establishing your business credit reports and helping you get set up with the reporting agencies. So you can see that as part of that, we help you get set up with the reporting agencies. We help you fix negative accounts as well. And then we also help you get 90%, as we talked about discount on credit monitoring. We help you get LexisNexis, ChexSystems credit report, and we help you go through and dispute and fix those credit reports as well. So that's something that we help our clients with. You can absolutely do that on your own by getting LexisNexis and go through that. But that's something that we do for our clients as well. Hey, Ty Jade from Las Vegas. A lot of you do you save your lives? Yes, we do. And I just told you how to actually access those saved lives as well and how to get replays. A lot of you are asking for replays, and we talked about that as well. A lot of you sharing. I love the fact that all of you guys here just came in and shared. Look at all this sharing going on. That's just cool. Entrepreneurs wanting to help other entrepreneurs. Just absolutely love that. Okay, and I'm just getting any questions here. If you have any questions. Okay, so it looks like looks at both personal and business. It depends. If you give me more insight on what you're specifically talking about, we can. Some loans do, some credit does, sometimes they don't. And I can give you some. Information on that and tell them not to. Okay, that's it. All right. So let's go see if I'm just trying to get to any questions that we have so I can make sure that they're answered. I'm the biggest inventor in the whole world. I love that. Congratulations. That's a heck of a Guinness World Book of Records accomplishment there. And Anya says, what was the price again? So you can go to creditsuite.com/webinar to get that. But to give you an overview, we could basically do one payment of $29.97, 7 payments of $5.97, or we'll work with you with customized payment. So if that for some reason that doesn't work within your budget, then all you have to do is just give us a call and we'll talk to you and make sure that we have one of many different options that we can go through to help you there. And I love that. Thank you very much, Samson Scott. I love that. I appreciate that. So thank you very much for giving me that shout out. And I want to go ahead and answer any questions I still have. I'm still kind of scrolling through to get every questions. Good morning. Okay, so I can't send you a presentation if you're dropping your email in here, but you can email us info@creditsuite.com if you're part of the webinar, and they'll make sure that you get the replay to the right email address. I've only been in business for 1 year. Can you get financing? Yeah, you absolutely can get financing. And a lot of the options we talked about today, you can do. Remember, cash flow financing, you can get 6 months in business. Collateral-based financing even works for startups. Business credit works for startups. Credit-based financing works for startups. So we talked about a lot of different ways that even new businesses are able to come in and be able to get money. Ohio, Louisiana, Texas, California in the house. A lot of you. Okay, I have a story to share. TD Bank offered a startup business loan but wanted to put a lien on my business. I declined the offer. Yeah, a lien on your business is a pretty significant thing. You probably want to stay away from that for sure. Atlanta, Georgia, El Paso, Texas. How much are your payment plans? And this, again, we talked about that as well. Talked about our payments and other payments that we can help you with too. It's possible to get sub 100 through our financing source if we can get you approved there. And that's something we can definitely talk to you about as well. And shout out to Coach, AKA our cousin Derek Harper. Derek is one of my very, very, very close friends. I love Derek and all he's done. It's been so cool to watch him progress the way he's progressed. And you know what? It's a really testament to what happens if you just genuinely are in this thing to help people. And I can't say that enough. I mean, a lot of people are in business to make money. I get it. Well, money's a pretty good thing. But when you shift your focus to genuinely just want to really help people, and that's why so many people are confused of why I give so much out for free. Because I want to help people. Is what I care about. And there's 2 types of people out there. There's types of people that will take my free information and go try to do this on their own, and they'll get some success. And it'll not be as much as they could with help, and it'll take them longer, but they'll get some success. And I love that group. Because that group, if anybody tries to say something mean online or do something shady, that group comes to my rescue 100% of the time. For all of you in that group, God bless you. Thank you very much for all that you've done for me in Credit Suite. And then there's the other group, the people that just want the faster, easier path, right? The people that say, look, I want to work with the experts. I want to get the most money at the best terms. I want to get through business credit in 6 months instead of 3 years. And that group is the people that enroll with us. They're the ones that get the faster, easier results without having to try to figure out everything there is to figure out today. So again, if you're in business to genuinely help people, then the rest all falls in place because people understand your intentions. And it really is the key and help building multiple 7- and 8-figure businesses that I will tell you is that when you get out of it for making money and you get into it like Derek Harper is for genuinely helping people, then that's the moment where, you're graced with all kinds of really cool things. You get to help a lot of people, you get to employ a lot of people, and you get to really make a difference in this world, at least from my opinion. I mean, what do I know? But that's at least what I've experienced in my life. So I appreciate everybody. All right, so I'm going to go ahead and wrap this up. And I love that too. Gene says, God bless you guys. Thank you very much. I don't know if that was intended for me or not. Okay, what would the SIC codes be for transportation? You need to look it up. Here's why. There is no SIC code for transportation. There's a lot of subcategories of NAICS codes for transportation. All you have to do, though, is go to NAICS.com right here. And if you go to NAICS.com, go to find your NAICS, you can find that. But if you go through here, what you're going to find is that transportation, I don't make sure where it is off the top of my head. There's a lot of So you're asking about transportation. You just asked me what the NAICS code is. Here's why I can't tell you. You see what I'm saying? And this is where people get messed up. You just asked me what the transportation code was for NAICS. And I don't know, let's take a look here. 2, 4, 6, 8, 10, 12, 14, 16, 22, 24, 26, 28, 30, 32, 34, 36, 38, 40, 42, 44, 46, 48, 52, 54, 56, 58, 62, 4, 6, 8, 70. I'm done. I'm done counting. So let's just say safely that there's almost 100 subcategories of transportation. And this is where working with our advisors will help you. They can help you find the right NAICS that's not high risk, that makes it easier for you to get funding. And you also understand why people fail to get funding. When you don't even know what your NAICS is and you tell somebody you're in transportation, you're letting them choose which of the 100 you're in. And again, these are part of the problems of fundability and part of those things that we actually work out for you. And Derek's on here. Look at it. Derek says, salute. I love you, brother. I got to come up and see you sometime soon. And you got to come down here and see me. So it's always good catching up. And thanks for sharing this today. It really means a lot to me that you did. Okay, so I'm going to go ahead and wrap up. Thanks, everybody, for tuning in. It really means a lot to me that you did it. I hope you got something out of this. I hope you walked away with maybe one thing you didn't know before you came in. Obviously, I hope you walked out with the roadmap, right? I hope you clearly see 3 C's: cash, credit, collateral. Now I know how I can get money, right? I leverage my strength. What is my strength? My weaknesses is consumer credit. I'm good with that. Ty showed me how to build business credit. He showed me how to use cash flow. He showed me how to use collateral. We talked about 20-something different kind of funding programs. Oh, I didn't know lenders even looked at me for fraud. Now I know what they're looking at. Now I know how to get that dialed in. What? LexisNexis. I didn't know there was a 300-page report. Now I know how to get it. Now I know I can dispute it. Now I know what the small business financials. Now I know. Now the system is there. And again, if you want the actual, now that you have kind of the map of it, if you want the actual tool and the guide to help you mine the gold, give us a call. It's exactly what we can help you do. 10K worth of really cool bonuses by the end of the week. And that's the way I really look at it, is now you see the gold's out there, the money, and now you have the map to get it. Now the question is do you want the tool, which is the Business Finance Suite, to go mine that gold? And do you want the guide to show you exactly where the gold is and help you mine it? That's the coach. That's what our Business Finance Suite actually will do for you. So if you're ready to take that next step, give us a call, 877-600-2487, info@creditsuite.com, creditsuite.com/webinar, okay, to be able to get going. And let us know if you have any other questions. Thanks for wrapping up. I appreciate you all tuning in. I am going to go ahead and shut everything down. Don't forget, this will be available for playback if you attended the webinar. We will get it to you. And let me see, actually, did I have a Q&A? Yeah, it was Q&A. Do you recommend going to a private lender or funds? I think private lenders or alternative lenders or fintech lenders, any of them can work. It depends on the situation. But really, I think it's about finding the right loan program first, then finding the lending source next. Sometimes it's private, sometimes it's fintech. So I'm going to go ahead and wrap up. Any other questions, give us a call, 877-600-2487. Don't forget 10K worth of bonuses through the end of the day Friday. Oh, and one more thing. I forgot to tell you. I forgot. I'd be in so much trouble for not telling you this. There's a free challenge if you are interested in becoming a business loan broker. It's at businessloanbrokerchallenge.com. It's 100% free. Businessloanbrokerchallenge.com. It's 100% free. And with this challenge, it takes place on the 21st, next Monday, but the next Monday. It's a week long. everything you need to know about running as a business loan broker, how to start a business loan broker company as a primary or secondary business. The lenders will be in there to help you actually get signed up to offer loans through them. We've got branding experts, fundability credit experts that will help you get set up in there. The main gurus in the industry, like the main handful of the top trainers in the industry, are all going to be there to train you. So all the people that train business loan brokers and building communities and how to process loans and how to market the business and how to set up your branding, all of that stuff is going to be there. So if you have any interest at all in offering business credit financing, you go to businessloanbrokerchallenge.com. That's businessloanbrokerchallenge.com. 100% free. There is like a paid back end if you want. It's like $97. You could hang out with the funding, the speakers afterwards, and get all the recordings. And you can get that if you want upon exit. If you don't have to. But hit join challenge. Fill out like a little bit of info. It's 100% free here. First name, email, company name, and phone. And then the next page, you go right into the Facebook group. The whole thing happens in the Facebook group. It's like a flash mob. I call it a funding flash mob, where it's just basically a mob, but we just create a flash mob of people, a Facebook group that just gets created out of nowhere. Thousands of people join the group. We all come together as a community for one purpose, which is help launch and scale a business loan broker company. And all of that happens 100% for free for you as part of this challenge. And that's March 21st. So before you forget, right now it's 100% free. Just go to businessloanbrokerchallenge.com and make sure that you get registered for that. Okay, so thank you. Thank you for the valuable information. Thanks for tuning in. And I'm going to go ahead and wrap up. So again, thanks for coming in today. Don't forget creditsuite.com/webinar. Don't forget you are entitled to a free finance assessment. We'll look at the fundability to see what's wrong and help you fix it. We'll get your business credit reports for free and go through those with you. We'll talk to you about financing. You can get now 100% free finance assessment. All you have to do is give us a call at 877-600-2487, info@creditsuite.com, or you can schedule online at creditsuite.com/consult. 10K worth of bonuses. Mention you saw the webinar through Friday. You can also go to creditsuite.com/webinar to get that. So thank you very much for tuning in. I'm going to go ahead and wrap up. I hope you have an amazing day. Don't forget to give us a call for our free finance assessment. And I look forward to working with you to help you get business credit financing to scale your business. Take care. Have a great day.